even a modest 25 basis point cut can help turn analyst sentiment more bullish.
The highly anticipated September rate cut is nearly here and could bring a welcome boost to some struggling sectors.
They've still got that debt on their balance sheet, so they got to refinance the debt.
MarketBeat's Chris Markoch shares a list of 3 sectors and 3 stocks that could be the biggest rate cut winners.
That's where you're going to start seeing these stocks potentially take off.
Why these forgotten areas of the market should be on your September watch list. Let's dive in. Chris, so great to have you back on the show. Hard to believe it's finally September, and I feel like the entire market has been waiting for this for months now, all summer really, with the expectation of those Fed rate cuts coming this month. Let's start out with really how likely it is that these rate cuts are coming. It seems like the market has just already decided it's going to happen.
This is a point in time where investors just have to take their emotions and their own opinions out of this. If you look at the CME FedWatch tool, it's forecasting about a 91% chance that a 25 basis point cut is going to happen in September. You'd have to see some fairly alarming data coming from CPI or PPI or an enormously strong jobs report on Friday to find something that would probably deviate the Fed from that plan.
And we won't really find out, though, what actually happens until closer to the end of the month. But what we want to talk about today is who could be the big winners, assuming that rate cut does actually happen. You have a list for us today of 3 sectors that could really benefit from this Fed rate cut, assuming it happens, and some specific examples of the stocks in each sector that could benefit most. So we're excited to get to this list today. One question I want to cover before we get into this list is the potential that these rate cuts could already be priced into the market. Again, there's been such a huge expectation from the market. Do you think that some of the impact of what could happen with these rate cuts are already priced in?
I think that's possible for some sectors and some stocks. In fact, in the article that will probably be posted on MarketBeat either later today or tomorrow, I specifically stayed away from talking about technology stocks because tech stocks, in particular the growthy tech stocks, are going to be a sector that would benefit from rate cuts because a lot of these companies are still relying on debt to fuel their innovations and to fuel their progress. That will be aided by lower rate cuts. However, I do think that's one area of the market where a lot of that growth may already be priced in. So the 3 areas I was looking at are areas where perhaps that growth isn't quite priced in yet. And you could also, in the case of all the stocks and the sectors we're going to be looking at today, investors can benefit from getting a nice dividend.
That's definitely something dividend investors are happy to hear about. We've been talking so much about growth stocks recently. We haven't really talked a lot about these high yield stocks that are out there. If you're looking for other names that can get you some really high yield dividends, check out this free article available for any of our YouTube viewers right now. It's on the top 5 undervalued dividend stocks that have strong payout potential. You can scan the QR code now or click the link in the description of this video to get that free list right now on MarketBeat.com. Again, it's normally for our all-access premium subscribers on MarketBeat, but for our YouTube viewers, this is a free article that you can check out right now. Well, I'm excited to take a look at this list. Let's get to that first sector that could really benefit from a rate cut later this month.
The first area I'm looking at is real estate investment trusts, REITs. This is not a popular area when the market is going gangbusters and people are looking at risk-on stocks like the technology stocks. But in an environment where interest rates are coming down, this is a sector that may get re-rated by analysts and it can start looking very attractive.
Yeah, it hasn't looked that attractive this year, as you just hinted towards. REITs have not been doing well for a few months now. How big of an impact could a 0.25% change in the rate actually impact REITs like this?
So I don't think it's about necessarily the fact that the rate's going to get cut by 25 basis points, but I think it's the expectation that this is the pivot by the Fed and that this is the first of several rate cuts that are going to be happening between now and the middle to end of even next year. And that just says whatever momentum the stocks start getting from this rate cut will just start accelerating, especially in areas like commercial real estate, which is where these REITs rely.
All right, so let's look at an example, Chris. What is a stock that you would recommend keeping on your watch list as the rate cuts might come in later this month?
Sure. I'm going to look for one of the leaders in the sector. As a matter of fact, you'd call it probably the unquestioned leader in the sector, and that's Realty Income. The stock's underperforming the broader market, but it's probably been still one of the shining stars in the sector. The company has a diversified asset portfolio. It's got a triple net lease business model that puts a lot of the company's costs and they throw that to its tenants. So that helps the company be operationally efficient, which you see from their adjusted funds from operation, AFFO, that they actually increased what their AFFO per share would be for the full year in their last earnings report. Just a solid company. And with investors likely to maybe be rotating out of bonds and looking for high yield dividend stocks, that's a sweet spot for REITs. And again, Realty Income is one of the better stocks that investors can look for in that environment.
Now, before we move on to the next sector, my one question for the REITs area is because it's been such a tough year for this whole sector, are we seeing an impact in the yields investors are getting from these REITs?
I didn't look at that from a sector perspective, but what I can tell you is that hasn't been the case with Realty Income. In fact, they've been increasing their dividend. They've increased it for over 30 years. They're probably going to increase it. They're going to continue to increase it. And remember, these are monthly dividend payers. So investors that buy these stocks, they're getting that dividend like clockwork every month. It has a 5.5% dividend yield. And right now, people would look at that and say that may look a little high with interest rates up where they are now. But if interest rates come down, it's going to make that dividend yield look a lot safer.
I think this is good news for a lot of investors who rely on these monthly yield companies and have really liked REITs for this reason in the past. So we hope that this sector comes back a little bit. A good first sector to talk about, Chris. Let's move on to that second sector that could really benefit from Fed rate cuts.
So here we're gonna look at dividend aristocrats that are sensitive to the higher interest rates. And before I give my specific example, let's talk about why I'm choosing that sector. And I hinted at it a little bit with Realty Income, but it's worth repeating again. And that is lower interest rates are going to say, if you're an income investor and you've been putting a lot of money into bonds and treasury bills, you're going to be rotating out of that and you're going to be looking for places to get a better yield. And that's where the blue chip dividend aristocrats come into play because they're going to give you a competitive yield that's going to be similar to what you'd get with the treasuries, similar to what you'd get with the bonds, and it gives you that chance for capital appreciation. That's why I think this is a sector to watch closely.
While we're watching this sector, which company in this sector would you say is the most important one to watch right now?
Yeah, we've talked about this before on the channel. I know I have. I know Thomas Hughes has, and that's Verizon. The reason why I like it specifically, not only is the fact that investors can get the stock still for under $50 right now, but Verizon over the past 5 years has been a poor performer, not just in terms of stock price return, but in terms of the total return on the stock, even including the dividend. I think it's down like 3% over the last 5 years. The reason for that is because Verizon's been making a huge investment in 5G, which of course now is the industry standard. We all have it on our phones. We all have it almost wherever we go right now. It's spread out throughout almost the entire country. And that's good news for investors who are looking to get into Verizon. Why is that? Well, because that means that they've already sunk their capital costs into this. And now it's time for the company to start seeing that return to the company in terms of improved recurring revenue, improved operating margins, and improved free cash flow. Now, that's not to say they were ever bad to begin with, because throughout these 5 years, Verizon's continued to increase their dividend. But again, investors who are looking for safety in these stocks, that dividend's certainly going to start looking a lot safer, and it's likely to increase because Verizon's done that for 20 consecutive years.
I think this is a really interesting stock to talk about now. I know we're talking about more of these safer dividend stocks on this video today, but what we talk about on the channel are those high growth tech stocks. One of them is ASTS Space Mobile, and we talked about how that technology, the could really disrupt the whole cellular service and that whole market in the country and across the globe. Do you think that there is some truth to that impacting Verizon down the road? Is that new kind of competition and really that new way of looking at cell service have a potential impact on Verizon stock long term?
I haven't looked at that specific issue that closely, but I would say certainly I would imagine it would. Technology doesn't stand still. And ASTS is a great company for those investors who are looking for that risk on growth company that might benefit from rate cuts, by the way. But that future is not today. And if you're an income investor and you're looking for dividend stocks to ride into this rate cut environment, I think Verizon's still a solid choice for that investor.
Yeah, I want to talk a little bit more about specifically how rate cuts would impact Verizon. I know you said they were doing a lot of the 5G build out, but
Right.
most of that is done now. How would the interest rates specifically impact Verizon and potentially other similar stocks in this sector?
They've made their capital spending, right, for the 5G, but they've still got that debt on their balance sheet. So they got to refinance the debt. You've been hearing a lot in the financial press about how President Trump, one of the reasons why he wants interest rate cuts is to refinance the federal debt at lower rates. Well, companies are the same way. Verizon wants to refinance that debt at a lower rate. And so lower rates would give the company the ability to refinance that debt again at lower rates. And that goes back to all the benefits I just said: improved recurring revenue, better operating margins, and of course, better free cash flow.
Yeah, sound logic on that one. I like it. It's a good company we haven't talked about in a while on this channel. So thanks for bringing that one up. Let's get to the third sector that could benefit from Fed rate cuts if they come later this month.
So here I'm looking at regional bank stocks. Now, this might seem counterintuitive to a lot of investors because certain banks, like if you're a big bank like a JP Morgan Chase or a Bank of America, they're kind of agnostic towards rate cuts. They're going to do fine no matter which way interest rates go. But investors can look back to 2023, and that was when interest rates got up to around 4.5, 4.75, 5%, and the regional banks did terribly. And that's because regional banks are really, really sensitive to the higher rate cuts, certainly more so than the big banks. So I think as interest rates started coming down last year at this time and now look like they're going to come down further, that's a big benefit for the regional banks.
The first two sectors you talked about both kind of had a tough time in the market over the
Right.
last 6 months to a year. How about regional banks? How are those stocks faring in the market this summer?
Regional banks have actually been performing pretty well. They're not performing as well as the big banks, and that investors might expect that. But in an environment where rate cuts are going lower and will probably keep going lower over time, I believe regional banks have the potential to outperform some of the larger banks in the short term, and there's a few reasons for that.
Let's talk about that. What about these rate cuts will help regional banks perform better?
When interest rates are moving higher, regional banks have to compete for deposits, especially with online banks and even the big banks. And when interest rates are coming down, they're not going to have that competition as much for the deposit costs. So that benefits them. Second, the regional banks are going to benefit because as interest rates come down, loan demand, not only from personal loans, but also commercial loans, that demand is going to increase. And the borrowers that have loans can refinance at lower rates, and it's going to mean that there's less risk of loan defaults for the bank. This is another area, just like we talked about with REITs, regional banks are another area that's likely to get re-rated by analysts as they factor in lower interest rates. And so even a modest 25 basis point cut can help turn analyst sentiment more bullish.
All right, well, let's get into that specific example. What is a regional bank stock that you would suggest putting on that watch list for September when these rate cuts may come?
Sure, there was a lot of examples I could have chosen, but the one I stuck with was PNC. One of the reasons I like it right now is it's very attractively valued. It's trading below its 5-year average PE ratio. Good dividend story. It's increased the dividend for 14 consecutive years. Its current yield is about 3.3%. So again, this is a quality regional bank player that just looks very well positioned and probably a little undervalued for the sector right now.
Certainly an interesting company and one we haven't talked about on the channel yet. So thanks for bringing that stock to the table. I want to talk about this one and all the others that you've mentioned today, these sectors too. Is there any evidence that we're already seeing people and investors kind of more interested in these stocks gearing up for that potential rate cut this month? Are we seeing some of that priced in action that we talked about earlier in the video?
Yeah, I wouldn't necessarily say that these stocks have rate cuts priced into them, but I think we started seeing in August a general move for investors away from some of the high flying and perhaps overvalued tech stocks, and they were moving into other sectors. Some of these stocks in some of these sectors have been the areas where investors are already starting to make their bets as far as where to invest when the Fed cuts rates. And now that we're into September and the institutional investors are coming back in, I think this is the time to really watch, because they're going to be starting to set their portfolios for the last quarter of this year and into 2026. So this is where you could see some significant repositioning in these stocks.
I think my last question to wrap up this conversation is timing. When you're looking at these sectors, adding them to your watch list for a potential impact from a rate cut, is it good to look at adding them before that rate cut could come, or waiting to see what actually happens with this rate cut at the end of the month?
You'd want to wait and to make sure that the rate cut is going to happen. That would probably be prudent. And I don't think any of these stocks are going to run away from you if you decide to wait until after the cut's made. However, I do think you would want to get involved with these companies before they announce their next earnings, because I think that's where you're going to start seeing these stocks potentially take off. And so if you're looking at PNC, you're probably looking at them reporting earnings somewhere in mid to late October. And, Verizon and, Realty Income would probably be somewhere in there as well. So you've got a little time, but I think I would be looking at getting in before that next earnings report, because I think that's where you have the real chance for these things to take off as we head towards what a lot of analysts are predicting to be a strong end of the year rally.
Some really good advice, Chris. If you want to add these to your watch list, make sure to sign up for our SMS program too. You can text YouTube to 68285 and sign up for our free SMS text alert for these stocks if you want to add them to your list. That way you'll get alerted to any major moves that might happen in these stocks. If you want to follow them and see what happens before or after this rate cut might come. Chris, thanks again for this great list and discussion. Let me know what you think in the comments. Are you adding any of these names to your watch list? Are there other names or other sectors that you are watching to see if that Fed rate cut later this month might make an impact? We'd love to hear from you in the comments. Thanks again for watching, everyone. And as always, happy investing.